Greetings and welcome to this week's edition of 401k Real Talk. This is Fred Barstein, contributing editor for Wealth Management, RPA Edge portal. I review all of last week's industry stories and pick out the 5 most interesting ones, providing open, honest, and candid discussions. So let's get real. First story, of course, is that last week the U.S. Supreme Court in the Northwestern University case focused on excessive fees and underperforming investments, opened the door for more lawsuits by making it harder for plaintiffs to dismiss the case. Simply providing a diverse menu of low-cost options is not enough. Plus, plans have to remove imprudent investments and not offer too many options. The case was remanded back to the 7th Circuit. Set it and forget it will not make it anymore in today's defined contribution world. Plan sponsors need to be proactive and engaged, which is good for advisors as plans need help creating and monitoring their investment policy statements, their retirement committee, and providing fiduciary education and training. Second story, lawsuits are not slowing down. 3 new lawsuits filed just in the last week. A $3.4 billion floor plan. Record-keeping fees are alleged to be 3 times more than the norm. And they cited BlackRock's target date series as underperforming. Dish Networks and the Boston Children's Hospital, similar lawsuits, record-keeping fees, and both cited Fidelity target date series. Does anyone see a pattern here? And really, the question I have is, are advisors' fees next, and why not? Third story is UBS is buying a robo-advisor. They're paying $1.4 billion to buy Wealthfront, which was the first robo started in 2008. It's pure tech, not a hybrid. They have 470,000 U.S. clients, $27 billion in assets. Their co-founder stated that the hybrid model has not worked, validating the pure tech model he claims, but maybe he should talk to Vanguard and Schwab, whose robos are hybrid and substantially bigger. The UBS press release mentioned that they're going to be using Wealthfront for retirement plans and equity plans. These robos are good for smaller accounts, and it's similar to what Empower is thinking with personal capital. And the question in the industry is Betterment next, and who would buy them? Fourth story is new firms offering Bitcoin in retirement plans. The latest is a company called Choice. Forest All has been offering it in 401k. And iCapital has been putting out a lot of ads for Bitcoins in IRAs. The latest volatility in Bitcoin calls into question whether these investments are appropriate for retirement accounts. Research by Capitalize, an IRA facilitator, showed that some people might be interested, but a Morningstar report showed limited interest. I think that the Morningstar report is probably more accurate. And then the fifth story is about the 4 roundtables that were held at the end of last year, 2021, from September to December, with the heads of the leaders of 401k record keepers, broker-dealers, aggregators, and CIOs. And the main theme is the 3 C's: COVID, convergence, and consolidation. Those dominated the discussions. Also of interest was the access to and protection of participant data, and how to engage and advise the 95% of the participants that don't have enough assets for personalized, customized advice, as well as retirement income. And with the focus of the industry on the participant, A fourth C that was mentioned is the looming competition between advisors and record keepers as plan level fees decline and costs rise, as well as expectations of the private equity money flooding the market, especially with RPA aggregators. So those were the 5 most interesting stories I saw this week. I've listed another 5 that I thought were worth reading. Please let me know if I missed anything or if you found this update useful. Otherwise, I will speak to you next week on 401k Real Talk.